Daniel Lacalle is with us, Chief Economist at Tressis Gestion. Do we get another rate cut from the Fed this year?
I think we will. I think that the risk of the Fed even going into the barely spoken territory of negative rates at some time in the future is very likely. I think that we will, because all of the signals of recession might be easing. That's true, but it is also true that the level of growth is likely to continue to be subdued. If you look at the trade deal with China, it basically makes the economy of the United States might grow around 1.4, 1.6% next year, probably at the best. We're talking 2%, so it's very likely. I think it's very possible.
See, I've heard some conflicting views that have suggested that actually the Fed might want to hold fire on official interest rates, as there is this ongoing argument about reducing rates, but it will continue to expand the balance sheet quietly in the background to make sure that there is sufficient liquidity running into the banking system to support economic activity.
Absolutely.
Is there a possibility that actually 2020 turns out to be a year where we just continue to see balance sheet expansion, not only from the Fed, but other central banks?
We saw at the end of last year that the so-called no QE continued to become more of a QE than ever. In fact, what the Federal Reserve has done has been to expand its balance sheet over and over without reducing it. So what I think is that the Fed will continue to be quite aggressive in that point. I think that the issues in the repo market remain, and I think that it's showing that there's a lot more leverage in the market than what they expected and a lot less liquidity. Therefore, they will continue to pump the balance sheet, and I think that the Eurozone will also see ECB balance sheet expansion, and obviously Japan. And if, as expected, the Central Bank of China, PBOC, will maintain its policy, we're talking about a couple of $1 trillion of added balance sheet expansion without thinking of very aggressive moves. So I would be cautious. I would be interested.
Relevant